Hello traders, welcome to my YouTube channel. In today's video, we'll be looking at systematic market structure. Okay, by systematic we mean you cannot complete process 3 without starting from process 1. For example, this is what I mean by systematic. Let's say we have three phases: phase 1, phase 2, and phase 3. Okay, if this system here is systematic, it means you cannot jump to phase 3 without completing phase 1 and phase 2. Okay, so that's what systematic is. It means it moves from one stage to another, from one stage to another, from one stage to another. Okay, that's the context which I'm looking at it here. A systematic market structure, meaning you're looking at market structures across time frames. What do you want to see before you take your next move? Okay, if that thing does not occur, do not take your next move. Okay, you want to be seeing A to execute B, you want to be seeing B to execute C, and so on. And this is what I'm going to help you in this video. Okay, this video will take away the confusion you have when it comes to market structure. I know I've done videos on market structure in the past, but I see it necessary to do this other one to include more ideas, okay, more concepts, so that you can understand how the market truly operates. Okay, without wasting time, we have three types of market structure. Okay, we have the bullish market, we have bearish, and we have the sideways. Okay, I hardly don't talk about this. We have the sideways market structure. Pay attention, please. Pay attention. We have these three types of market structure. Now, the bullish, you all know this, but I will still say when market is making series of higher highs and higher lows. What are the characteristics of this bullish market? In a bullish market, the lows are always respected. Okay, every low here are respected. The low here, they are all respected. Okay, the moment price go below this low, then you start thinking of a shift in order flow. Okay, this is a bullish order flow, meaning price keep respecting the lows and taking the highs. That is order flow. Okay, but the moment price shifts and take out this low, then the bullish market seems to be questioned. You need to question your continuation of the bullish move. Okay, so what do you do in this particular market here? Okay, whenever you see a bullish structure, then or a simple structure, then this is what you need to be doing. First of all, you look at it and say, do we have a trading range? Your trading range is simply the low here and the high here. Okay, for every break of structure. In this case, we have a valid break of structure here. We have a break of structure here because price closes above the previous high. Okay, now once there is a break of structure, you identify the trading range. So this is the range you'll be planning to take your trade. Meaning when price pulls back into in this case discount zone. I will talk about discount and premium yet in this video. Okay, when price comes back in here, you are going to take the trade up based on a point of interest that you've identified here. Okay, now the moment this low breaks a new high, your trading range changes. Okay, your trading range becomes this low and this high, and the objective is that this low should not be taken. So when price comes in here into your discount zone, you can take the price up. Okay, now once there's another break of structure, your trading range changes as well. Okay, this is all you need to be doing in a bullish market. Then wait for a pullback. A pullback might be from a supply zone up here. All this pullback happens at the supply zone. Okay, and then once you identify the supply zone, you expect price to trade lower. Then when price trade lower into your discount zone or any form of POI that you identify, you can take your trade, and the next move should also break structure. So this is a bullish structure, okay, guys. This is a bullish market structure. Now, the bearish market structure is simply a situation whereby market makes series of what? Lower lows and lower highs, lower lows, lower highs, lower lows, and so on. Okay. Now, what is the characteristics of a bearish market? In a bearish market, the highs are protected. Okay, the highs here are protected. We don't expect price to trade above the highs. Okay, the highs that break structure, we do not expect price to trade above it. Okay, and how do you trade this? With a simple textbook illustration. Whenever there is a break of structure, okay, in this case you have a bearish break. Okay, you are going to identify the trading range. Okay, in this case, let's use this line. So the trading range is simply the high and the low. Okay, this is where you'll be trading. Okay, in the next slide I will talk about internal structure. Okay, this is just a textbook illustration. Okay, now when price trades back into a point of what? Interest. Let's assume you have a point of interest here. You can decide to take that trade, and the goal is to take this low. Okay, when this low is taken and we have a break, then our trading range changes from here to here. Okay, then you identify a point of interest in here, somewhere there. So when price trades back in, you can decide to what? Take your trade to the downside, and you continue that process up until the trend changes. Okay, so that is that on a bearish market. Okay, and the last point here, the last move here, is simply what? Price, you wait for price to trade to your point of interest, and you take that trade. Okay, so this is characteristics of what? Both bullish and what? Bearish market. The other kind of market is when market consolidates. Okay, market does not go up, does not go down. Okay, does not go up, does not go down, and just like that. Okay, so in this case, how do you trade a sideways market? Okay, trading a sideways market to me is one of the most easiest of them all. Okay, and I'm going to explain more on this when we get to the other part. Okay, in this video. Okay, first of all, you must identify your range. Okay, so we have this trading range to play with. Okay, so one way of trading this is for you to simply go to the lower time frame. Like this move from here to here is a bullish trend in a lower time frame. Okay, you can anticipate price moving from here to there from the lower time frame perspective when price shifts what? In market structure. Okay, when price shifts in market structure, you can decide to take the trade from here to here, and bear in mind that that move is simply a sideways move in the higher time frame. Okay, you can do this by scaling down to your lower time frame, and from there you are going to what? Start executing your buy and sell orders. Okay, now what happened? No, we all know that market does not move exactly like this. Okay, market does not move like this. Instead, it moves in this manner. Okay, now I want to talk about the internal market structure. Okay, internal market structure. Okay, now this will help you when you are trying to trade using market structure. Okay, now this is a complex illustration of what I just explained for a bullish scenario. Okay, we have a 4 hours broken structure, the 4 hour broke structure here, bullish, and the move from here to here is the impulse or expansion leg. Okay, up to this point. Okay, ignore the color. Up to this point is the expansion leg. Okay, that means market move from here to there. Now, while the market moves, it always creates a POI or a form of imbalance. Okay, which market needs to come back to mitigate. Okay, when market creates an expansion leg, it creates what? An imbalance or a particular supply or demand or a point of interest, which market tends to come back to mitigate before moving higher. And that is the reason for the pullback. The move here is a pullback. Now, since this is a 4-hour bullish move, the internal structure, okay, the internal structure within the lower time frame will be switching bearish in order to get to this point of interest. Now, this is a 15-minute time frame. I just drew this. The moment price start challenging the low, okay, that means we have a what? An order flow shift in the lower structure, which signifies what? The internal structure of the market. Okay, and before you know the lows here, there will be lows in between. If you draw some candles in a typical market, this high should produce something like this. Okay, now the moment this internal structure starts shifting, you can expect price to trade lower to that point of interest or to that fair value gap in order to take the price upward. Okay, now this is where you use the multi-time frame analysis into your favor. Okay, now at the point somewhere here, there was a supply zone there, and that is the reason why price is reacting up. So once you identify that supply zone and you see the market is shifting bearish, that means the order flow has shifted bearish internally. It is when this low is taken that you have a total shift in market structure on the 4-hour. But remember, a move up here is simply what? An uptrend in the lower time frame. So this move down for the 4-hour is also a downtrend in the lower time frame. Okay, stay with me. So once price takes this low, you can anticipate price to go lower from here to that point of what? Interest. And you can trade this in the 15 minutes. Okay, now let's assume you know that okay, this is a bullish market and you want to buy this market. And using multi-time frame analysis, this is how you go about it. Okay, you wait for price to come in here. In this case, the 15 minutes have changed on what? Bullish, and it is in line with the 4 hours. 15 minutes, 4 hours is bullish, 15 minutes is what? Bullish. When price trades back, remember, as 15 minutes create this leg, there is a form of imbalance in here that was created, and market needs to come down to mitigate in order to move higher. Okay, now this blue line represents the 1 minute. Okay, the moment the 1 minute shift in order flow, meaning an internal structure change in the 15 minutes, you expect price to come back to that fair value gap or that point of interest to mitigate, and what? And you expect what? A move up. Now, looking at this, you have the 4 hours shift the market, 4 hours bullish, 15 minutes bullish. Now, the 1 minute, once it tapped into the 15 minute point of interest, it created a shift in market structure as well. Okay, so by so doing, we have both the 3 time frame to what? Bullish, and you can simply take your trade from here. And this is what I do every single day. Take your trade from here. Now, instead of your stop loss to be here below the 4 hour, you can simply put your stop loss below this 1 minute time frame. Okay, 1 minute low, and then you expect price to go, which will give you a good risk to reward ratio. So this is what the market does every single day. Okay, a push in the 4 hour is simply what? An uptrend in the lower time frame. A pullback in the 4-hour is simply what? A downtrend in the lower time frame. Okay. And if each time you are looking at market structure, you should have 3 time frames that you are looking at. Okay. I gave you an example when I was talking about swing trading. Okay. In this case, in this example, I use 4 hours, 15 minutes, and the 1 minute. Okay. Always look for a 3 time frame to do your multi time frame analysis, a top-down approach. Okay, top-down analysis to the market. All right. So now we are done with the internal structure. I want to introduce you to a concept of what? Strong high and weak low. Now, I've watched some content on YouTube which talk about the strong high and weak low. But, so what we're looking at here is strong high and what? Weak low. So, let's say this. Okay, now you are here. This is a bearish switch in market structure. Okay. Now let's go back here. Let's look at the concept of strong high and weak low. Okay. First of all, what is a strong high? A strong high, or let's start with a strong low. What is a strong low? A strong low is a low. Now, a strong low must do 2 things. Must do 2 things before you call it a strong low. It's not only to break structure. Okay. It must do 2 things. A strong low must take liquidity and also lead to a BOS. This is what I want to see to consider a low, a strong low. It must take a kind of what? Liquidity first, then it must break structure to the upside. That is a strong low. Okay. A weak low is a low that fails to break structure. A weak low is a low or high that fails to break structure. Okay. A strong low or a strong high is simply a high or low that takes liquidity and also leads to what? A BOS. And in this case here, we can consider this to be what? A strong low, because as it's coming down, it has taken some form of liquidity. When we go to the chart, I will explain more to you. Okay. The strong low takes liquidity, breaks structure. So this becomes a protected low. When you hear me say protected low, I'm speaking in form of what? Strong high and weak low. Okay. Now this high fails to break structure. The moment the high fails to break structure, it becomes a weak low. And what do you do to a weak low? It becomes your target. The weak low becomes your target. Okay. So when price pulls back and you are taking your trade, this is your first target here. And this low, as it broke structure, before doing that, I will check if it has taken liquidity. Okay. Now let's assume that the liquidity has been taken from this simple illustration. Okay. And broke structure. This now becomes what? My strong low. This becomes my weak high. Okay. Strong low, weak high. The lows that are being respected and also leads to break of structure is a strong low. Then the weak strong high is an high that took liquidity and break structure. Take note, liquidity must be taken. If liquidity is not taken, that high could stand as what? An inducement. Okay. That high could be an inducement. Price can decide to go, take it, and then move out. Now this high that took out this liquidity becomes my strong high. Okay, and it leads to a break of structure. So I expect this high to be protected. When price comes in, even as close as this, I will still be taking my trades, and my target will be here. Okay, so that is strong high, weak low. If we go back to this illustration here, this high in the meantime is what? A strong high, because it took liquidity into a pure high, broke structure. Okay, broke structure. So when price trades back in, this other high is an inducement. I don't want to talk about this now. Maybe when I do a liquidity video, I will talk about the inducement. Okay, so what I need to know is that price should not trade above this. Should not trade above this. Okay, above this high. So this high is my strong high. This low is my strong low. So when I'm taking this trade from here, my first target will be this, because they fail to create break structure. Okay, so and so on, up until the order flow shifts. When the order flow shifts, this becomes my strong low. This is my weak high. When price comes in, my target will be the weak high here, and then I can also target the weak high in the 4 hour. Remember, this 4 hour, this low to this high is a weak high in the 4 hour, and that will be your final target. Okay, so when you talk about strong high, strong lows, that is exactly what I'm talking about. Okay, then the last thing I need to talk about is what? A change of character. Okay, change of character. Or chalk. A change of character, or what I call it a change of order flow, is simply a switch in the order flow of the market. Okay, for example, in this case here, the order flow of this market has been bullish. Okay, the order flow has been bullish, series of higher highs, higher lows, higher highs, higher lows. The moment price takes the low, okay, now for my chalk, or to change, for my change in order flow, I only wait for the low to be taken, whether a wick or a body close. I do not care, because normally in a strong uptrend, the low of that trend should not be taken. So the moment I see price sweep the low, okay, that means I will be anticipating a change of what? Order flow. And that is what some people also call change of character here, meaning in an uptrend, price takes the high, they also takes the low. And now a change of character is simply a shift in market structure, of a shift in the internal market structure. Okay, a change of character is chalk, is a shift in the internal structure, internal market structure. Okay, is a shift in the internal market structure. Okay, I couch. Okay, where should you look for a chalk in a lower time frame? Okay, like this 4 hours move here, for you to anticipate a reversal, you must look for chalk within this lower time frame. Okay, you must look for chalk within the 15-minute lower time frame to tell you that the order flow is shifting bearish. Okay, so the moment you see a high taken and a low taken, that is a chalk, a change of character. Okay, and when price trades back into discount, you can take your trade down to what? The fair value gap, or the point of interest. And then from there also, we can see a change of character here. Market changing bullish, in this case. Internal structure. Remember, chalk is simply a shift in market structure when it comes to the internal market structure. A shift in the internal market structure. Okay. So we are going to go to the chart to see a kind of example. Okay. So we want to look at a market structure. From here to here, we have what? High, low, high, low, high, low. Now what can you see here? You can see that this, all before now, our eyes are being what? Protected. Okay, the eyes are being what? Protected. There was no breach in the eyes. Okay, up until this point. This is the eye. It created a lower low. Now what do you see? Market moves trades above it. Okay, if we are on the pounds USD on the daily, the order flow currently has changed what? Bullish. Why? Because there is a what? A shift in order flow. This high here has been taken. Okay, so price is coming back to trade into a sort of what? Point of interest. Okay, to a sort of point of interest. Okay, before price continue to move higher. Okay, now if we go to the 4 hours, you can see that plays out here as well. We have a downtrend here. So far we have a downtrend, and the 4 hour shifted in market structure, at this level here. So from here, the moment you get your pullback, okay, you can try to take that trade. You can see a pullback, you can take the trade, and it also went ahead to break the daily. This is the daily high, broke above that, signifying what? More strength for the price to also go higher. If you look at the 1 hour, what can we see here? If you look at this here, you can see that now looking at this monthly chart here on the Euro USD, all this while we have what? Respected highs. From what I've explained to you, we have respected highs here. The highs are being respected. Okay, up until this point. Now at this point here, this move did not take this high. I want to explain a lot of concepts in here. From this place, this is the last high. This last high failed to break structure, so this makes it a weak high. Now this price moving up did not take this high, so this makes it a weak low. So this now serves as what? An inducement for price to come sweep these equal lows here. Price to sweep these equal lows, okay, before moving up. The liquidity is simply the fuel that the market needs, okay, to push price. Okay, the moment you see this shift happening, that means price wants to mitigate some imbalances above. Okay, now when the price shifts in market structure, the shift to me happens here in the monthly. Price took this low. You can see this is a strong low. Took this low, broke structure, strong low. Okay, weak high, a pullback, weak high. Okay, price trading back into a point of interest, demand zone. Okay, from here also you can see that this low took out the previous month low and also led to what? A break of structure. Also led to what? A break of structure. So that makes this low a strong low and this high a weak high. Okay, strong low, weak high. So what happens? Price trades from this supply zone, okay, in order to go lower into this to mitigate this OB. Okay, price came down to mitigate this OB, and we should be expecting a bullish push. From my series predict the market series, I'm bullish on the long term on what Euro USD. I expect the price to push higher, okay, to fill up some imbalances, and the only imbalance I can see here is this here. So we could potentially get there, but this is a monthly chart. It will take some time. Okay, we also have another imbalance here. Okay, so this is the first target. This will be my second target. Okay, I could not make video this week because I was busy with some stuff. So now, just understanding week high, week low will help you in your journey as a forex trader. Okay, a week low is not just any low that takes the high. Okay, for example, you call this one now. This is a low that takes the high. It's not a week low. A week low should take a sort of what? Liquidity. Okay, should take liquidity. Like this low took out last month low, which is powerful. You taking a month low or high is a powerful signal. Okay, that the price is willing to what? There's a shift in order flow here. A shift in order flow. So we expect price to go up. Okay. Now, how do you trade this? You go to your lower time frame now. Okay. Go to your lower time frame and wait for what? A shift in order flow. Okay. Like here, the concept I'm showing you here, I will create a video to explain more on it. You can see this high without looking at the lower time frame. From the monthly chart here, from the daily chart here, I can see that this high has been taken. And normally in a strong bearish environment, the high should be protected. Okay, the moment this high gets taken and traced back in, I'll be looking for buy. For me, I'll be looking for buy, which I did. I took some trades here. I shared some of them with you in one of those my training exercise. Okay, now you go back to, let's say, the 1 hour. This is the line I drew. Okay, and you can see in the 1 hour, this is your trade here. In the 1 hour, you wait for an internal change of structure in the 1 hour, and in this case, we have that here. We have that here. Market came back. This is a strong low. It took liquidity, okay, and broke structure to the upside. Okay, and by so doing, you mark out this place as your point of interest to buy from, and once price trades back in here, it goes up, and we have a bullish sentiment. But the moment price took out the low, okay, took out this low, our sentiment changed bearish as well. Okay, a shift in order flow. This high took out all this liquidity, broke structure. When price trades in, that is your sell. Okay, but because the overall we're looking at a bullish play, you can easily take some trades here down to this fair value gap here, down to this point here. Okay, and you can continue the ride. So all you need to do as a trader is to understand, are we in a bullish market? Are we in a bearish market? If we are in a bullish market, identify the highs, the lows that should not be taken, okay, and continue moving in that direction. But the moment that low, the recent low, gets taken, either by a wick or by a body close, then we have a shift in order flow. Does that mean the price will start moving down immediately? No. It signals to you that as a trader, you need to pause and check that your upward potential again, if there's need for market to come down. Okay, either to mitigate an OB or a fair value gap, or to whatever it is. When you see that need, and it could be a pullback or a deeper pullback. Are you with me? So once you see that, you look for your trade in lower time frame, and you take that trade in that direction. If you look at this, let me use the replay button here. up to this point. Let's see. Let's take it up to this point. So that I can go to a lower time frame. So let's look at the 15 minutes here. Okay. In the 15 minutes, our recent high is this. I think this is my recent high. It's not, sorry. The recent high is this. So I'll be waiting for price to trade above this. Or if you go to the 5 hour, which you might be executing from, now this is the recent high, okay? Because you want to take your trade by having a better risk to reward. So you wait. In this case here, this is where you should be taking your trade from. Okay. Now let's look at this price action here before we continue. You see this price action here? Price this low, taking this liquidity and breaking structure. In the interim becomes my strong low. So I'll be looking to buy when price trades somewhere in there. Okay. This is my strong low here. Let's look at 15 minutes. Okay. And you can see is the order block. If it becomes the order block in the 15 minutes. So from the look of things, in the future price will come in here. Okay. If I'm to enter this market, since this is an inducement, I have other rules to enter the market. Okay. Since this is an inducement and price take that low and it's close to where I'm looking to buy, okay, because sometimes your limit order may not be taken, so you can execute the buy here and knowing that your stop loss will be just below this, so that you will not, because sometimes market may not necessarily come to your limit order, which is understandable, or in that way you've missed the trade. Still beautiful, but keep it, okay, keep it open. Probably in the future price will come back in there. Okay, let's see. So as you can see, price hasn't come there, but notwithstanding, let's look at the daily by faster. So currently we still have a kind of fair value gap here, which the market needs to come back and trade into. Okay, so I will not be surprised if price comes back, sweep all this low, tap in here before going up. Okay, so that is a possibility. So on that note, I hope this video will help you with your market structure understanding, knowing when there is a shift in order flow and knowing where price is heading to. The next video, I will talk about the different strategy you can use, which is the order block strategy, in getting your entry.